really is an interesting day with not only a rotation of sectors, but also a rotation of investors from smart money to dumb money, which we're going to spend a lot of time on. But this bar right in here is super interesting to me, and I'll show you why. Now, in front of you is just a program, and what it does is it just actually tells you where your candlestick patterns are. And this one is telling you right here very clearly that you have a Marbuzu white. We're actually going to show you an example of one where you have a Marbuzu black, but it's a candlestick that does not have a shadow. It extends from the candle box to the open to the close. It means close cropped or close shaved. The thing about this is it's super rare to see these. As a matter of fact, if you were to look at this chart and go through here, within a year, here's one, and I believe there's another one in here somewhere, but I could be wrong. But I know that there's one here, but I thought there was another one. But that's how rare they are. It's not very common to find them because you're literally open is the low and close is the high. And that's exactly what happened. When you see them, you usually get a follow through day. And we're going to talk about that with the rotation, but it's very rare to have that happen and then not have a follow through. How strong that follow through is remains to be seen. And I think that has to do with the smart money, dumb money, and the rotation that we're about to go over. I will say this, we are seeing rotation in the NDX 100, and on the breadth front, it is holding up a little bit better. We are starting to get a little bit of this tweezer right in here as well, and the reversal is very nice, but is it going to be enough? And we're not going to spend a lot of time on the Middle East because it's all headline risk. So whatever we go over could change overnight or in 5 minutes off a tweet. But I do want to point this out. If you look at NDTH, which everybody has access to, NDTH right up here, you're still up on the 200-day. You're still at 58%, and you're probably higher today. And when you go and take a look at the SPY breadth, and we look at the S&P, you've cracked here and you're below 45%. So the NASDAQ 100 is actually stronger from the SPY, and that's what you're looking for. As always, subscribe to the channel, click all notifications. Let's get into it. Smart money, dumb money. Now, we don't refer to this as smart. We don't refer to this as dumb. We refer to this as institutional and retail. And the reason for that is the way that it is calculated. The one thing that we always point out is that you're calculated based upon institutional order flow, and this is calculated upon retail order flow. Super important to get that as we go forward. And the reason why that's so important is because then it makes sense as to why they move the way that they do. Smart, i.e. institutional, moves very, very slow, where dumb, retail, moves very, very fast. Sometimes retail gets it right, sometimes smart does. But it's really what's in relation to them, and I wanted to spend some time on this because there's some developments here that, as I like to say, are absolutely glaring. The most obvious one that we can all see is just the bottom here and how we peaked out on the smart money, how they were completely fully invested there. And that was pretty much the max puke level for underinvested on retail, or i.e. dumb money. And we can just see this pattern over and over again. But there are times when we have retail that is completely maxed out and that institutions are completely undervalued, as they were here in October, caught off guard. And we all remember that this is when Itchy came out and said, I'm done raising rates, and we're going to do tons of cuts, and then that didn't happen for another 9 months. But the most important thing about this is that there's a lot of data in here, and how you want to interpret it is up to you. The one thing that I think is unequivocal is that retail tends to move fast and institutions tend to move slow. There are certain turns here, and when they start to happen, we want to pay attention to them. Number one, when we're maxed on retail and retail starts to break, we want to see how deep that break is and how much institutions going to go out there and buy. If retail tends to sell fast, if institutions buy fast, we don't really have to care about it. But if institutions are going to sit here and take their time like they did here, and retail sells fast, well, it's just a matter of time. You can even see it here. Retail decides they went out super fast. What happens? Institutions buy, but they take their time, and therefore you get corrections. Meanwhile, retail continues to puke as fast as they can, and institutions just take their time, buying very, very slowly. What we see here now is we see institutions starting to buy, and we see retail continuing to puke this out. And we are seeing some developments here. When we zoom in on this on the hour, we can see that the most important thing for us is going to be time. And what do we mean by time? Well, when we broke here and sold down, what happened in this little range? We started to accelerate. And as we accelerated over that period of time, we can see real clear that that marked that bottom. And then we got maxed out here. And then, of course, the max. But What this is telling us is that when retail wants out, depending upon how fast they want out, is how fast that this will drop when they're set up this way. For example, when retail was here and here, they could have cared less about this. They weren't in a hurry. But when they started to sell, then we just kind of flatlined. And then from there, retail was selling but slower and institutions were buying slower. It's the speed. So what we need to see here is the speed of these two. That speed is really significant. And it's definitely something that we want to pay attention to. There's also a couple other things. We note that when these crosses happen and blue crosses red, so blue goes to the upside and red comes down, we do know that that often is something that can mark what we refer to as a short-term top. And it doesn't always happen, but you will see it here and you will see it here when blue comes up. The exact opposite tends to be true, that you're seeing some kind of bottom when you break down, because when institutions sell, what? They sell super slow. And retail buys like a pig. They can't get in fast enough. That's why it's important to understand this. It is really very important to grasp this concept and understand why I spend so much time explaining what retail and institutional are. And for those that have watched this video a couple times and say that I say it, when we get new people, picture if you were new, you'd want to hear that 30-second diatribe, because now you understand the significance of this. There's even more when we dive into it. When we take these apart, you can actually see a lot. And then when we turn them into a spread, there's a real clear indication on what's about to happen. And I do think it's worth just taking a moment of our time to note that this is the highest fully invested year to date that retail has been. We have not been this fully invested all year long. So the higher you are, the taller they are, the harder they fall, they say. And I think that's important, but you also did have us have less investment down here than you did here. So they're already invested. And the problem with that is if they're already full and you're up here, then there's not as much for them to buy. And that can lead to a problem. And so when you tie this into a spread, as we're about to in a minute, you'll see where the issue can come in. In our chart here, we can just see dumb money confidence broken out, and we can see this over the 3-year period. And I do think it's pertinent. And why? Because just because you're over here on dumb money, it doesn't matter. You can still go higher. The issue really isn't that you're over that. The issue is the break. And then the break is relative to where the other is. So it's not that you're just breaking. And I want to be really clear about that. It's you're breaking in relation to smart money or institution. That's the issue, not the break itself. You can have one break where you're not even over the line here, and that could be even a greater break because of the speed that dumb money or retail sells, versus that institutions are just sitting back going, we're not in any hurry. And that's very important to get. As we looked at the trajectory, zooming in on this, on just the 1 year, we can see really clearly that the trajectory is slow. It's a trickle for now. We're not even making really a lower low to this yet. It's a far cry from the speed in which we dropped here. So we just want to watch the angle and just make sure that it doesn't accelerate. So we'll be watching this closely for the next week. The other thing that we're noting is that smart money on the 3-year is ripping up. So that's another thing. If we trickle down like we're doing and we're ripping up, it might just be chop. It might not be, hey, we're going to correct. It might just be chop, but there is something here. When we dive into this spread, which we do use, and I do pay attention to, there is a trigger here, and I do think it's valid. Change this real quick, and I got to do this unedited, so just bear with me. So what we're looking at here is the cross of the red line to the upside by the smart money or institution and dumb money confidence spread. Smart divided by dumb, institution order flow divided by retail order flow. All right, okay. What we're going to note is this negative 25 line. And what we want to pay attention to is when we cross over it, what happens. So if we cross over here, and what might be easier just to mark it this way from a demarcation standpoint and just come straight up so you can see where they are. And then just see what happens when it crosses to the upside. And exactly what I'm looking at. It doesn't have to go down. It can just go sideways, which is exactly what it did here. But if we don't mark these off and look at what happens when you cross, I think it's a disservice. And it doesn't mean that's going to happen all the time. It didn't happen here. But we just want to be aware of it, that if we went back 12 months, they're all calling peaks, essentially. Short-term peaks where you're there a couple months and then you regroup. Except this one, we just ran buckshot over it. This one was like a honey badger. It just did not care. But these others, they're fairly decent if you're looking at these over a 3-year period. And once again, you're not seeing this fall from grace. But what you are seeing, in my opinion, is you are seeing a possible short-term top and then going sideways. What's really going to affect this and why it's really going to matter It's going to be the speed in which dumb money panics and smart money steps in. I think we're going to get lucky here, and dumb money is going to just hold a little bit stronger, and smart money is going to realize that they're out of position a little bit. And we're seeing that through some of the rotation. And I'll show you what I mean by this today. You could see some of the rotation today. Comment below. I think that the explanation of this is extremely helpful for those that are looking at their swings and longs and trying to figure out why things aren't moving the same way, because obviously your trading has changed over the past 2 weeks. We've all seen it. So this is very helpful. And also when you overlay this with the breadth, it's very helpful. But let me show you one of these rotations I'm looking at. Now, I do want to go some of this rotation, but I think we'd be remiss if we didn't talk about HIMS and obviously the huge plummet that it had today. There was news with NVO. NVO came out and stated very clearly that they want nothing to do with HIMS, something about their business practices. I'm not going to get into it for time's sake, but it's worth reading. We did a really nice short on this, and we're able to stay short this for the remainder of the day. It was actually a very lucrative trade, and it wasn't even our best trade of the day. And I will walk through that in some detail, but this was really bad. If you're looking at this on a daily, not only do you gap down, you get a pattern here that's pretty rare. Matter of fact, you won't even see a lot of them on here. But they're called black marbuzos, and it's because you open and close at the high is the open and the low is the close. Whenever you see these, I'll tell you exactly what it is right here. This is a candlestick that has no shadow. I'll read it real quick. Extends from the red body candle, the open, close, or even both. In Japanese, the name means close cropped or close cut. The candlestick could also be referred to as bald or shaven head. Well, that's aggressive. But the important thing about these is when you see them, and you will not see them if you go and look for other ones, you won't see them that often. But when you see them, it is extremely rare for you not to have follow through on it. Really rare, because it's just straight out selling. You might have the hopers and the dreamers, and that's usually what happens with this. You get the hopers and the dreamers for a day, and they're like, oh, maybe I'm okay. Maybe things will be fine. Things will not be fine. And then they usually break, and then once they break, they begin again. I think your first real level, your real test is probably that 38.25. But this was really bad because they were on their way. Things look great. They did this merger. They finally got that agreement, and then it took them a whopping, good Lord, I don't even think it was that long. What was this? May 6th, I believe is when it came out. So it took them about 6 weeks to mess it up. And for them to go to that length, to get someone like Novo to actually do that trade, to actually give them access and then pull it, tells you a lot. What I think is so interesting is NVO's down. And I don't know that makes sense. I mean, I get it. You lost the distribution channel, but nobody wants the drug. Like, you don't think you could find another distribution channel? I don't know. Maybe somebody like Amazon, like maybe find another partner. It just seems to me like it's such a golden opportunity for them to go to anybody with a huge distribution network and cut an even bigger deal. So I'm not really, I don't know. I keep looking at this and wondering if, maybe I'll wait a little bit, but the 12 to 22, but you held that 55, and it's really hard to unsee that. But I do want to spend a little time talking about the rotation. While we're on the fat loss drugs, I do think it's interesting that you didn't rally on Lilly today and you stay below the 55. But NVO did not break its 55. The other thing is, really was a dumpster fire with its fat loss drug today. While we're on the topic, might as well stay on it. And Lilly didn't go up on that. And I find that troubling. But NVO held its ground. So we could be at that trough valuation for NVO, where we're in this kind of level, and it might make sense for us to look at this and see if that has the potential to actually hold in here. Just an interesting spot for this thing to stop dead. And I'm not so sure that, quite frankly, the stock should even be down on the news. I understand the distribution side of it. I have a real hard time for one of the best-selling drugs in the world that you're not going to find a distribution partner. I mean, call me crazy. And we should talk about everybody's favorite name while we're on the topics of what happened today in the world of trading. If you look at Tesla, the couple key things that I think are super important: huge volume, breaking out of this flag, getting above the 22, and you held. And this just presented a huge opportunity today because you were at a crossroads. And the crossroads, if you look at it, is just, the way that I look at it, I love to say this, was absolutely glaring. It was the same level that you've been fighting forever. If you drop this to a 5-minute, and once you say it, you can't unsee the level, but it's really this 332 level. And it ties in really exactly with when the Elon nonsense started. And then from there, we just kind of fell apart and you came down to that 272 level. But really what happened was that when we fell apart, that's the day. And then from that date, I have the pre and the post in. So we can get rid of the post in. It becomes even more obvious. But from that day, when we fell apart, we can't get above this level. So when we're sitting at that level today, all I do is watch those levels. And if you're looking at it from a 5-minute, it's a little cleaner where it's up, 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 and then builds the flag. You have your 3-bar pattern, and then you build the flag. What was nice about this, I usually trade off a 1, but you'll see the doji right in here. I'm doing a whole video on this exact trade because if you master this trade, you really only need this one setup. And your life gets very easy. But you see how that doji's in here? And then that body gets in that body, and then this body gets in that wick. So you're filling the wick, as I refer to it, all the way up, right? You're just filling the wick the whole way up. Just keep moving the ledger. And what that does is it just tells you, hey, this was rejection, but it's not rejection 5 minutes later. Hey, this was rejection, but it's not 5 minutes later. And then you can actually see it in the volume bars. One of the keys of any great trade that you're going to do that's going to have legs, one of the keys, and I will work through this, hopefully I'll have the video done for you guys by Thursday, but what you're going to see here is that your volume's actually increasing. And that's all you really kind of need to see. It shouldn't be that way. It should be the first one and then that's it. But it was over and over again until it stopped, and that actually did mark the top, that peak volume. What's important about this trade was we were actually able to stay in this for over $20 just off a simple trade. But what really got us in it was this, is understanding where those levels were, and you can see the mark from here. But once you see this, that level right in here, up, down, tests. I actually tried this, failed, watched it, test, and then got back in. And for those that know pattern recognition, up, down, 1, 2, 3, up, reversal, key level. I mean, that's really all you had to see, and it was on. We could argue that, well, here's the VWAP, and here, I don't really care about the VWAP in the first 5-10 minutes, quite frankly, because you run buckshot all over it. But I get why people would. More important is the line in the sand, the demarcation line, because they don't move, right? They're not dynamic, they're static, so they're more important. Right? I'll take the static lines over dynamic lines any day of the week. It just makes your life so much easier because that's where they are. That's where the sellers are, the buyers. But once it flipped there on that test and then the retest, that was it, flipped. And then all we're doing is just moving the stop up over and over. Here, take a look. I don't have the live cut out yet, but let me show you this. So what I'm showing you here is I'm showing you the first time I entered, and then we retested that 332, and then I kicked it, and then we get back in the trade later in the day. Maybe it was literally 2-3 minutes later after it reversed, and we got back in and we took $16 out of it. And then we were just able to stay in the trade for a very long period of time. And all we had to do was just keep moving the stops up to all these tests because it just kept testing over again. And then we just finally moved it up to 350, what was it, 353.65 on the day trade side, and that was it. And when it hit 356, you can see down here with the timestamp, we just trimmed more, and that was pretty much it. We had some levels up here. 357.25 was another level on that name. But what I really want to get into is this. If you take a look at Cloud today, and let's go and take a look at this on a daily, and then from there, I'll be able to show it to you, because I want to show you this relative. So here's Cloud, and you can see the undercut and lift, which is perfect. It's exactly really what you want, but you have a 1222 that's pointing down, but you do the undercut and then you lift. So there's actually a pattern here where you broke your 20-day low, and then usually you get some kind of bounce before it starts to return. There is an actual trade here for that, which is kind of interesting that it did exactly that. And it actually filled the gap and everything. So it's kind of neat. But what we saw today from there, and then you take a look at the SOX couldn't get anywhere near the same level. So if we took a look at the SOX and we turn this into a line. Now let's go to just a plain chart for a second, and then we just take the cloud names for 1 second. We'll just look at cloud computing, which we could look at some other indexes as well, and we're going to see very clearly this demarcation on how they got this disparity recently. And then we dropped this to just a 5, and we came out to something like June. We'll just do June, and you can see the disparity. Well, watch what happens when you start getting into today, and you start to see this change on the day. And I just think it's pretty important that when you start to see this stuff that you pay attention to it, that actually cloud's leading. And we saw this rotation a little bit today, and it's not common for this to happen. I mean, if you go back and take a look at it, you can see very clearly this has not happened. So today's a little bit of a different day, and you're seeing it in the names. And what they're doing is stuff like this. Like, let's take a look at PANW for it. We'll go take a look at the plain chart for a moment. And just all I need is the daily to explain it. So what they're doing is they're undercutting the previous bar, and then they're ripping it up and closing at the high. And they're doing it on fairly decent volume. It's not huge, but they're doing it on fairly decent volume. But it wasn't just one name that they're doing it on. They did it on net. They did it on crowd. You can see these moves. They're absolutely huge. I think this had a 30-point range today. So they're breaking them down only to rip them up. And you look at Microsoft at all-time highs today, very similar, where Microsoft was at 472 at one point and turned and ran, and now it's at 486. I think that's very, very important for us to get, that there is a rotation out there, because then you look at something like Micron, and we were red today, AMD, and we're sideways today. everyone's looking at NVIDIA saying, why can't it get out of its own way? Well, they're rotating out of semiconductors. The one that seemed to hold on there the best was AVGO. And I don't know if it's Lutnick or I don't know if they're worried about some kind of geopolitical event, but they did rotate out of semis today and into software. So that's definitely something else that we have to watch tomorrow. That is it.